All right, Dominique, so excited to talk to you today.
Thank you.
Yeah.
Thanks for having me. I'm grateful to be here.
Well, we're grateful to have your amazing knowledge. Before we dive into a couple topics today, we're going to talk about some of the new changes Biden is making to the tax law. We'll also talk about some last minute strategies for small business owners. We're really got this May extended deadline looming.
Yes.
May 17th is our new tax deadline this year. So if there's anything small business owners can do in last minute sort of fashion to look at that as they get their taxes in under that deadline, we'll talk about that. I know we're also going to talk about other pandemic-related responses from the government, ERC, and recovering startup business. You have all kinds of exciting things for us today. So before we dive in, Dominique, would you, just by way of introduction, tell us a little bit about who you are and the company you founded?
Sure. So I know I've got a lot of initials after my name, Felina, and some of them were, actually all of them were very challenging to get, but beyond, the education of what qualifies me to talk about this topic today is that I'm just a tax geek. I love strategy. I love taking the ideas that Fortune 500 companies use and make those ideas available for everyday small businesses. And that's my favorite thing to do. I noticed that there was a need in the marketplace because a lot of tax professionals aren't trained in this area. And as business owners, we sometimes assume that our tax guy or our tax gal is taking care of everything under the tax heading. And this is really a different discipline. And so I founded the American Institute of Certified Tax Planners. We work with tax professionals all across the country that have dedicated their business to working proactively with their clients and help to bring those ideas so that we can put cash in your pocket. That's what we do. I feel like I'm the candy man.
You are.
Cash. Yeah. I need a different equivalent than the candy man. Because, if I say candy lady, it doesn't really, people don't get the reference, but I've been calling a lot of people since January this year. And it seems like lately, most of my calls are, do you want some cash? Do you want some cash? Do you want some cash? So I want to talk about that today.
Yes, absolutely. Gosh, there's so much going on with some of the federal stimulus that's coming down. So let's dive into that first.
Yes. Yeah. I first want to talk about some of the lesser known things. I think everybody at this point is familiar with the loan structure, PPP and EIDL, and those are great. But I think those have overshadowed tax credits, cold, hard cash in your hand soon for a lot of people. And so I thought it would be good to talk about the employee retention credit, as well as some tax credits for sick leave and for family leave because of the pandemic. And this is free money sitting on the table. So I want you to ask yourself, if you're watching this right now, how much of that money on the table is mine that you might not be claiming? So real simple, the employee retention credit just looks at giving you a tax credit for keeping employees. So if you have an employee that you're paying wages for, that's going to help qualify you for this credit. Now, this credit, the rules changed, Felina. It used to be when it first came out under the CARES Act that you had to pick, am I going to do the PPP and free money there, or am I going to get free money with the ERC, employee retention? That's been changed. And now you no longer have to pick. You actually can get both. And so I think because that changed in the less than a year, it's kind of buried in the hustle and bustle of trying to get everything done. Now, a question I get asked a lot is, can I, as the business owner, can my wages count for the employee retention credit? And the answer is we don't know, actually.
Okay.
It depends on the type of business that you have.
Okay.
So one thing we do know for sure, if you own a partnership, so a partner in a partnership, sole proprietorship, though you don't have wages by definition. So it won't count for you. It'll only count for employees that you have.
Can I clarify real quick, Dominique? Even if you are paying yourself as an employee of the company, or it's because you're not an entity like an LLC, S Corp, C Corp, you and the company are one and the same, right?
Okay. Yes.
Okay.
And specifically, the code actually points to businesses that are structured in that way. And it's because in the technical language of the code, you're considered to be self-employed, which means you're not an employee. Now, when you incorporate and you have a business, now you can be an employee owner. But the jury's still out on S corporations. And so there's a lot of S corporations out there. You're going to have to do what you're comfortable with. There's no specific clarification about this. We did get a notice from the IRS that said, here, we're going to help answer your question, because everyone wants to know, can the qualifying wage be the owner of an S corporation? Because you have salary and you take a reasonable wage. And instead of saying yes or no, they provided an answer that are not unlike most answers from the IRS. And it's everything but this. An S Corp owner wasn't on the list. What was on the list is all these definitions of related parties whose wages will not count. Okay. But they did not specifically point to the person who's related to those related parties as not counting. And so there's a number of ways to look at it. We're hopeful in the coming weeks that the IRS will be much more specific on that. If you're a C corporation owner, I would go ahead and claim it for yourself, because there's clear precedent that you can be an employee or considered an employee of a C corporation. Okay. And here's how it works. It's 50% of $10,000, of up to $10,000 in wages for 2020 that you paid. And there's two situations that help you qualify. One is if your business was affected negatively by COVID. So were your operations fully or partially suspended due to a government mandated shutdown? Yeah. And if you can answer that question, yes, then you qualify for the credit. And the amount of the credit and the definition of the wages depends on your change in gross revenues. Okay. Let's say that you answer no, that your operations were not fully or partially suspended due to the government mandate. We have one more chance, and that chance says, did you have a reduction in your sales? Yeah. When you compare to 2019 in any quarter, did your sales go down more than 50% or more? And if you answer yes to that, you can take the credit. Yeah. I'm seeing these credits are blowing my mind in terms of what's available.
I can imagine. My gosh.
So even just having a small team, I worked with a company last week. They had 4 people. That's $20,000 in cash that they're able to get in a 4-month period of time. Yeah. That could be a total game changer for a small business.
Absolutely.
So definitely make sure you look at that. The rules are confusing. However, what I've shared with you today is how it works.
Okay, perfect. And Dominique, on this, so folks, I know for myself, I use Sure Payroll. So I've gone to Sure Payroll. They are going to charge me $200 to amend my 941s, as they call them. And they're just asking me for a dollar amount. So I go to my accountant, I get we run the numbers. She provided me some spreadsheets, we crunch the numbers, et cetera. And then I provide them with the dollar amount. This is for 2020. And also we can amend, depending on when I got my PPP in 2021, there can be an opportunity to also take this ERC in 2021. And in this case, I can go back and amend Q1 for 2021. right?
Yes.
Okay.
There's more than one path to get to the money. Certainly amending those payroll returns is one way, but you can actually claim that credit on your next Form 941 that's due. And the nice thing about that is it puts more instant cash in your hand. To amend, it's a process, right? And the IRS has to keep up, and hopefully they're processing as many as they can. But you have the opportunity to take it on your next 941. And what that means is you'd get a refund back of whatever you've paid in, plus some. Okay. So if you exceed your taxes that you've paid, you'll get even more back.
Got it. And so we're now in Q2 of 2021. So in lieu of me going back and amending Q2 and 3 of 2020, somebody's tuning into this and they're like, what are these ladies talking about? Right. Then I can take that credit moving forward as opposed to going back and amending.
Yes.
Okay.
And so what I'm advising people of, and some of it depends on the cooperation of your payroll company, if you use a payroll company. I got to tell you, what I've seen so far is payroll companies have been very reluctant to even participate in handling this paperwork because it's a lot of additional paperwork, and payroll companies are kind of going, hey, I didn't sign up for this when I set your fees.
My payroll company is charging me for it.
Yes,
I'm happy to pay $200 to get back $10,000.
Right, right, exactly. So look at it as what kind of return on investment you're going to get. Absolutely. And then the credit continues, as you said, Felina, into 2021 as well. So this is handled on your payroll tax returns is where you're going to file for these types of credits.
Got it. Okay. I'm sure folks have lots more questions about the credits.
Yes, if you do, put them in the chat and to as many as we can.
Yep, exactly. And then if folks, Dominique, a lot of people are probably thinking like, I maybe have a CPA, but I'm not sure. I love my CPA and I'm looking for a new CPA that can help me with all of this. What's the best thing for them to do as far as finding a great CPA that can really help them with some of this?
Yeah, I think the question that you want to ask yourself is your relationship proactive enough for you? Are you working with someone that regularly brings this stuff to you? Like I was saying, I feel like the candy man because I'm constantly texting or calling saying more cash, more cash, more cash. And you deserve that too, right? You deserve it. I'm not saying you'll get it for the price that you're paying right now, because really you may just be paying for tax compliance to file your returns. This is a different service. Yeah. So if you're not satisfied with your answer to that question, go to certifiedtaxcoach.com and you can find our directory and you can find someone to work with near you.
Perfect. Awesome. And I know you have certified tax planners all over the country. So
we do. Every state and most larger cities we do, and a lot of smaller cities too. But and of course with phone, email, Zoom.
It can be anywhere, right? Yeah.
It is. Yeah.
Yeah. And I just really want to underline what you just said, Dominique, because I talk to a lot of small business owners that really have never thought about tax planning and helping them understand that it really is a plan. And yes, you're going to invest in that plan just like you would any other plan. But it is, I mean, I know we can't say guarantee of anything, but I can almost guarantee you that you are going to, well, you're definitely going to get your money back. And then,
and a good tax planner should be able to tell you that up front, hey, here's how much you're looking at getting, and here's how much your fee is. And that's really the difference between, your operations cost of accounting fees where you're paying to have the taxes done. And let's not kid ourselves. You have to. Yeah. We don't want to be in prison, right? For tax evasion. But you should see a return on investment in strategizing. Yes. And the person you're working with should be able to tell you that. If they can't tell you that, there might be a problem. Do they really know what they're doing?
Yeah, absolutely. Okay, let's dive into some of the other things. This recovery startup business.
Yes.
thing.
So this is kind of like icing on the cake. It takes the ERC, the employee retention credit, and it creates this new category of business that's called recovery startup business. And that means any business that started after February 15th of 2020. So government is looking to reward people who are going out and being innovative. And Felina, there's tons of businesses out there like this. People who've started Etsy stores because they got laid off, people that are now freelancing and offering their services from home, and maybe have never owned a business before. This is possible for you. The calculation works the same way, only here's the thing. In 2021, we get a credit of 70% of up to 10,000 per quarter. And this would be for quarters 3 and 4 of this year.
Okay.
So again, let's take my example. Let's say that in my example, the person with 4 employees that started their company last year, as long as they make $7,000 or $10,000 in a quarter, 3 and 4 for this year, you've got 4 times $14,000, right? What is that? $56,000 in tax credits. Wow. That's huge, right? Wow. And again, like a game changer, that could give you the ability to make a hire. Maybe it's your first hire.
Yeah.
So strategically know that that's potentially coming. And here's the beauty of that recovery startup business. You do not have to meet any other qualifying factors other than wages and be started after February 15th of 2020. Okay. So now is your time, folks. If you've been
start that business,
if you've been thinking about starting a business, or let's say you've been experimenting kind of on the side with something like an Etsy, it might be a great idea to formalize and go ahead and make that new hire, because that could really do a lot of good for your business, and you're helping the economy at the same time, and you get free money.
I love it. I love it. Okay. So I want to dive into this a little further to make sure I understand and we're clarifying. So after February 2020, started the business up until what point? Let's say somebody's watching this and they're like, okay, I want to start my business next month. Do they have to start it sometime this year before third quarter? What does that look like?
The requirement just says post February 15th of 2020. So you could start right now, right? Okay. And here's where that 70% credit kicks in, Felina. It's for the third and fourth quarter of your wages of this year. And so let's say you time it out. I mean, geez, we're almost to the end of second quarter already. You could make a hire in third quarter, at the beginning of third quarter, file for your credit, and boom, get your instant cash, up to 7,000 right away.
And let's go back to this entity question, right?
Yes.
So I need to set my new business up as an LLC or a corporation, SRC, in order to have myself, let's say I'm a sole owner, sole entity, an LLC. Right. I'm the only employee. I put myself on payroll. You're saying, for the most part, we're understanding, although, they keep coming out with new things.
Right.
We're assuming right now that I can be that sole employee of the company, put myself on payroll.
Oh, just for corporations.
Okay.
Then just be aware that there's a risk that the S corporation wages do not qualify. Okay. And so what I'm saying is, if you're hesitant at all about your own wages, whether they qualify or not, and you own an S corp, maybe hold off a little bit. Here's the nice thing about this is there's a statute of limitations, so you can go back and fix this. So if you didn't do this last year, you can do it now. So C Corps, no problem. S Corps, you've heard what I've had to share and how some people are viewing it. So tread at your own risk, right? Yeah. But here's the thing, LLCs, it really just depends on how it's taxed. An LLC could choose to be taxed as a corporation, or it can be taxed like a partnership. And if it's taxed like a partnership, the owner's wages will not count.
Got it.
Can we talk about where the owner's wages do count?
Yes.
Yay. Okay. So owner's wages do count for 2 additional tax credits that are from last year. So get ready, free money. Okay. And these have to do with sick leave. So even as the owner of the company, we get sick, and you may have found yourself away from work because of COVID, either because you had COVID, you were exposed to COVID and had to quarantine, you name it. And now, we're seeing people have to take sick days because they got the vaccine and have to miss because they're sick and it's COVID related. So any type of sick pay that is COVID related for that employee qualifies for a paid sick leave tax credit. And this includes even the owners of the company.
Okay.
So although I did just say that owners' wages don't qualify necessarily in some situations for ERC, there's no such limit in terms of the ownership structure for these paid leave credits. Now, how much is the credit? Well, it's 50% of your wages up to $555 per day to a maximum of 10 days.
Okay.
So if you qualify for all 10 of the days, that means you have to have not worked on those 10 days because of some sort of COVID related absence. Then you'd qualify for like $5,000 in tax credit for you, for yourself.
Wow. Interesting.
And to sweeten the pot a little bit, we all know that not only might you have been sick, but maybe someone in your family was sick. So there's also a paid sick leave for family members. This covers not only, if your family was sick, COVID, suspected, quarantine, whatever, but it also counts as children who are home from school.
Oh, interesting.
And so you may have had to stay home from work because you have a child home from school and it's really difficult to homeschool at the same time and continue working. And because of that, you may qualify for that paid family leave credit. It's a maximum of $200 per day up to 10 days for 2020. And so again, that's like another $2,000 on top of the $5,000. And yes, you can qualify for that even as a self-employed person.
Got it. Okay. Gosh, so much to know here. All right. So, Dominique, anything, there's been amazing information thus far, but let's just say I'm a small business owner and I'm waiting to hit the send button on my taxes before May 17th.
Yes.
Any last minute tips that I might just want to double check?
Yeah, I like this question and strategy. I kind of call this hunting for change in the sofa cushions. I don't know that people really do that anymore, but I used to find tons of things in my sofa cushions. And so here's where you want to mine for these deductions is be sure to review your personal accounts. Look, the lines get blurred between business and personal. You may have found yourself where your business credit card was maxed out. And so you just went ahead and put in your debit card number or your personal credit card number. So give those statements one last scan through just to identify anything that you didn't already get that may be business related because it can be deductible. There's always the Hail Mary of rescuing last year, and that is with retirement planning. So if you're looking to contribute to a retirement account, you still have time to do that and have it count for last year. And if you've got something more sophisticated than an IRA, you may even have until October to make that contribution. Has to have been in place already, though, before last year end.
Okay.
So what about possibly taking your tax credit free cash and popping it into a retirement account, and boom, now you just got another tax savings on that, and you increased your net worth while you're saving for your future.
Wow. Yeah. So much to think about. Yeah. Thanks for the reminder on the stuffing money in your IRA. I always forget about that going back. So
yes,
we'll check that before we hit the send button on taxes.
Yes.
Awesome. Awesome. And then I also want to get to Biden has come out recently with even more things. Is there anything else that we should know?
Yes, he has. And, it's always good to be aware of what's being discussed politically, Felina. But what makes it really challenging in the tax world is that we never know what a bill is going to look like by the time it gets passed. Everybody's kind of tacking on their favorite things, and they're nipping and tucking here and there, and things end up cut. Of course, everyone's really worried about Biden raising the capital gains rates. Listen, I don't know how this thing will turn out, but from what I've read about it, it's just looking for raising capital gains rates on wealthy families, wealthy taxpayers.
Yeah, like the top 10th of 1% or something, right?
Yes, exactly. And what he has stressed is that for families making less than $400,000 per year, they will not pay more taxes. And that's great because, middle class really took a pretty big hit in that last major tax change.
Good. Okay. Awesome.
Yeah. And so unless you've got, serious amounts of capital gains and already seriously high income, if that is your problem, then definitely find a tax planner, because there are lots of ways to avoid that for sure. And hopefully you're already working with someone if that's where your income level is at. And there's been other talk about raising rates on C corporations, for example. Who really knows what this will look like at the end of the day? But one thing I can share with you is that it appears to me that he's really identifying a core group of taxpayers, and those are what we would call the mega wealthy. And so the tax increases that I've seen so far are really directed that way. So unless you're mega wealthy, and that's like $10 million a year or more in income, you probably are going to do okay if there's another round of tax change.
Okay, great. And Bonnie has chimed in here on LinkedIn, and her question is, hasn't it changed to an individual making over $200,000?
The Biden tax proposals?
I think that's what she's referring to.
I'm not aware of that. What I read, which was, I think, yesterday in the Wall Street Journal, he specifically said anyone making $400,000 and below will not experience a tax increase. And so, again, who knows what happened? The last, when we went through the Tax Cuts and Jobs Act back in 2017, I'm not really sure that anything we were told ended up happening in reality. And so that could potentially happen here as well. We don't know. It all has to do with our politicians and what they decide is best. Yeah.
And a bit of politics happening within this whole process, right?
Yes.
Campaign promises and trying to push things through.
But so the big question on people's minds is, look, if he raises capital gains rates, and that's the fear, right? Because if he raises capital gains rates long-term to ordinary rates, which is 37%, you might be jumping from 22 to 37 plus around 40 is where you would end up.
Yeah.
That leaves a lot of people. Hey, Bob Dylan did it at the end of last year. He sold his music catalog for $300 million in anticipation of Biden increasing capital gains. So a lot of people want to know, should I do that? Is that a move I want to make right now? And here's what I say is just be patient and wait. What's probably going to happen is they may make it retroactive to 2021, but hopefully you'll still have time within this year to make some important tax moves if you're going to find yourself in that situation where it increases. And again, most of our traditional ways of doing tax reduction, he hasn't mentioned so far, knock on wood. So there's still lots and lots of ways you can pay a lot less in tax legally.
Yeah. Good point. And Bonnie, thanks for the link to the New York Post article. We'll take a look at that, and I'll have Dominique chime in on that after we're done here. Yeah, it is a very fluid situation, and a lot of people are speculating. So this could happen. This could hit this group of people.
Right.
We won't know until it's gone all the way through the line. So
that's what makes it hard about taking action today, because again, did Bob Dylan really need to sell his catalog last year? Could he potentially have missed a lower tax rate? Well, it is what it is. He sold it, he's done, he paid the tax.
Yeah.
So you want to work with the information you know to be true right this moment, because I've never seen it where what somebody says, this is my tax proposal, ends up being the real law. Always looks different, always.
Yeah. Yeah. But I think what we can, it sounds like, kind of bank on, so to speak. And, this is our hard working tax dollars at work to help save small businesses, right? So it is free money, but we've effectively already paid into the system, right?
Yeah. Yeah, exactly. And again, if he sticks to his word and is really targeting sort of the mega wealthy here, that doesn't impact most small businesses, which actually make up 99% of this country.
Yeah.
And so the good news about that is that there's plenty of loopholes, plenty of deductions, plenty of credits. Just because you don't know about it right now doesn't mean it doesn't work for you. Yeah. So learning about those things can make a really big difference in your tax bill.
Yeah. And I just want to underline that again, Dominique, because the word loophole has a very negative connotation for most people.
Yes.
I will say, and now knowing you for, a dozen years and watching you work, and some of the folks that you and your team have helped, these are let's call them loopholes, fine. But they're there for a reason. Somebody wrote that law,
right?
Passed it for a reason. And the challenge that I see is small business owners don't invest in tax planning.
Right.
Therefore, they don't take advantage of the laws that have been put on the books, where the super wealthy got there partially because they have smart people helping them take advantage of the laws that are on the books. So, you don't get, not suggesting that we all want to be billionaires here, right? But as small business owners, we work our tail off. I mean, I know you work your tail off. I work my tail off, right?
Yes.
We're working 80 hours a week sometimes, right? And
right.
So let's use these to, these for advantage too.
Yeah, and to your point, Felina, it is there for a reason. The tax code is used to promote public policy. And one of the biggest public policies there are is this belief in stimulating the economy. The belief is that if they help businesses will create more jobs, people will spend more money, and the economy will flourish. And so if we don't use them, we're sort of not using the mechanism that's in place to have a healthy economy. And so if you've ever questioned yourself about, I don't, if Amazon's doing that, I don't know if I want to do that. You take advantage of what's there. But the biggest difference, like you said, Felina, is just knowledge. It's education, and it's looking for someone that's well versed in this. Because trust me, the IRS has no incentive to improve the level of education to include tax reduction strategies when you go to college, right? To be in this profession. So you really do have to be intentional and seek it out. But it is there for a reason. And that reason might give you the ability to hire a new person. Yeah. I mean, those tax credits could really come in handy a lot. And that's what we saw with the stimulus, is there to really help small businesses thrive in this pandemic.
Yes. Yeah. Or at least survive. My goodness, what a year it's been.
Right. Now, if anybody's watching that is related to the restaurant industry, please check into the grants that are available. It's tax-free money. It's extremely lucrative. There's specific definitions of restaurants that count. Unfortunately, catering companies don't count, but the opening for that just occurred on Monday. Okay. So you want to make sure you get your application turned in. Again, it's a tax-free grant. So if you're connected to that industry, you want to be checking that out.
Yeah, and grants are the best money to get, right? I mean,
yes, free money.
PPP was great, but at the end of the day, it's a loan, and you've then got to jump through the hoops to get forgiveness for it. So
yes,
grants are at the top of the list for sure.
Yeah.
Awesome.
Well, let's talk briefly too, and I just want to give a disclaimer.
Sure.
I want to talk about the difference between credit or tax benefit stacking versus double dipping.
Okay.
So you bring up PPP forgiveness, and what we're doing in that process is we're proving to the SBA that we spent that money in acceptable ways.
Yeah.
And one of those ways is payroll, one is rent and utilities.
Yeah.
So a lot of people have just sent in their payroll tax returns, said, hey, look, I made it all with payroll. You have a 6-month period of time to add up all those wages and then call it a day. But here's where the strategy portion comes in. Any dollar that you use to qualify for the PPP forgiveness, you can't use that same dollar for your tax credits.
For the ERC.
For ERC or the sick leave.
Yeah.
Okay. Yeah. Now you can stack those. Let's say that, for example, and this is where being strategic helps.
Yeah.
Let's say you come in towards the end of your 6-month window and you take all the wages from back there. You use that to forgive, and then you have your earlier wages to apply for the credits that are available. That would be a way of stacking those benefits on top of each other so you get all of it. Win-win, win-win, win-win-win.
Yeah. So I'll take an example.
Mm-hmm. Yes.
Right? So I got my PPP basically at the end of Q1.
Mm-hmm.
Right.
Yes.
And so I would at least want to wait and utilize part of that PPP for wages, my 60%. So let's say I got $10,000 for PPP, right?
Yes.
I need to spend $6,000 of that on wages.
Yes.
I may want to wait and use that money towards wages, not right when I got it, right?
Right.
I might spend that and then get my ERC for Q1 and Q2.
Exactly.
And then use that in Q3 since I have that 6-month window now.
You got it. That's exactly what I'm suggesting. Yeah. And a lot of people, it is easier. So I understand. It's much easier to send in 1 or 2 payroll tax returns and be done with your application to get forgiveness. But use up those qualifying non-payroll allowed expenses, rent. 40% can be rent, utilities, some covered costs like hiring accountants to help you with all of this mess. Use up that 40% and then try to use the remaining 60% on payroll that you're not also trying to use for the credits, because you cannot double dip.
Within that period of time, yeah.
Correct. So, yeah, it's kind of like they lay out specific dollars. They go, hey, this dollar that you earned on May 4th, that's pick one. It's either going to PPP forgiveness or this credit or that credit or that credit.
Got it.
You cannot use the same dollar for all of them.
Got it. Okay, sounds good. Well, lots to do when it comes to the ERC and getting in touch with your payroll company. And it's good to know, and I may run by your office and ask you this and so I'm sure I understand, but in lieu of me going back for last year, it sounds like I can still get the benefit of that, but not actually have to amend my 941s from last year.
Yeah, and that's the answer is yes for people who file Form 941.
Yeah.
If you maybe are a sole proprietorship or a partnership, you have an alternate form that you can use. Okay. It goes with the tax return itself. But again, my suggestion is that it might come to you a little bit faster if you use the choice where you can just change your next 941 and report the credit from that you qualified for before.
Okay. Sounds good. Well, lots to think about. Anything else we missed? I know we could.
Oh, lots and lots. But the bottom line is, if you have not gotten free money in the last year, you got to look into this, because there is so much free money and it's a game changer. It could really be a game changer for your business. So I hope you all will do a little digging. I hope this prompted some ideas of your own and that you'll be able to put that to work, because that's what this is designed for. It's to help our businesses flourish.
Awesome. Well, I'm sure we're going to have lots of comments and questions on these streams here. So we'll circle back around and try to get to everybody's questions afterwards. Thank you so much, Dominique, for your time. I really, really appreciate it.
You are most welcome.